Welcome to the Brainstorm episode 58. Today we've got an amazing guest, Kyla Scanlon, with us, and we're going to be diving into home insurance and what's brewing there. So maybe we can just start off, why home insurance? You know, a lot of people talk about not being able to afford a house, the housing market. How did you circle in on home insurance here?
Yeah, so home insurance has been top of mind for a while because I've done quite a few interviews with the White House on housing policy, have been advocating for housing supply for a long time. So I went to DC a few months ago and interviewed Jared Bernstein, the chair of the Council of Economic Advisors, about what sort of policies are being passed around housing supply, and there's a lot. But the issue with housing supply is the more that you build, the more that you have to pay attention to insurance. And so a lot of people have been talking about this issue, right? Like this gap between home insurance and available supply. And so, yeah, that's what piqued my interest, is you can't have more homes without more insurance. And we kind of have a crisis happening in insurance in a lot of states.
Maybe you can explain this crisis to the listeners and talk about some of the main factors contributing to it. You mentioned supply, but I think in your piece you went into a few other contributing factors. So maybe just help set the stage for everyone that may not be aware of the situation.
Right. Those pesky hurricanes.
Right. Yeah. I mean, in the piece, I sort of set out what insurance isn't, which it's not protection against hazards, right? Like flooding, fire, hurricanes, etc. It's actually a financial contract to reimburse property owners for the cost of repairing structures after events that are predictably rare. And so that's kind of where the key of insurance is predictably rare. And so a lot of insurers are pulling out of markets because the events are predictable, I suppose, but they're no longer rare. We have these big catastrophes happening all the time. One statistic that I cited in the piece is we had 28 disasters last year that caused over $1 billion in damages. In the 1980s, that number was 3. And even if you normalize that for population, it's still extraordinary, the amount of damage that we've experienced just due to climate change. And so that's definitely one part of it, why home insurance has become such a big issue. The other portion of it is reinsurance, because rates have been so high, it's very expensive to rent out a balance sheet, right? And these reinsurers are the people who are insuring the insurance companies. And so one can assume that if insurance is expensive, the insurance on insurance is going to be expensive as well. And so reinsurers, companies like Berkshire Hathaway, have been raising rates. Part of the issue, too, is regulation. So in places like California, home insurance is capped at 7% a year. So it can't increase and it can't increase more than 7% a year. And that is problematic because that means that a lot of people are now underinsured. So 2 out of every 3 Americans are underinsured right now. And that's partly because of the regulatory environment. So the example that I gave in the piece is a California home that had a premium of $2,000 in 2010 is now paying about $5,000. It's an increase of about 7% a year, but it should be much closer to $8,000 in premium. And the issue with this is that you have states like California, which tightly regulate how much insurance can go up. But that means that the insurers are now pushing those costs off to other states that don't have the same regulatory environment. Enid, Oklahoma is one example where in Enid, it's, some of the most expensive home insurance in the country. And yes, it's impacted by tornadoes, but it's nowhere like California where the risk is much, much higher. And so the people there are paying much more per $100,000 of home than in California, where people are paying like $50 per $100,000 in home. And then Enid, it's more like $3,500. And then, of course, building more is part of the issue. So Lance Lambert out of Rethinking Club, who does a lot of really great research, has pointed out that the more homes that you build, the more that you have to focus on insurance. And we haven't been. And in fact, State Farm, Allstate have entirely left places like California, Louisiana, in Florida. So that was a really long answer, but that's just some of the reasons why home insurance has become a really big issue.
Jake from State Farm just got up and left.
Yeah, right.
I guess what's been most surprising to you in diving into this in more detail, and what do you kind of see as interesting ways out of this spiral, right? Because it seems like these disaster prone areas that are getting the most inflow of people as well.
Yeah, no, definitely. People love moving to California. I had a statistic in the piece talking about that, where people are moving to these places that can't get insurance, which is quite sad. In for the home insurers, I think the surprising thing is they've lost a lot of money. They've lost $15.2 billion in their companies, and they're not going to stand for losing all that money. And so it's kind of a canary in the coal mine, where it's like, if the insurers are leaving, maybe we shouldn't be building homes in this area. But that's really difficult. And it's really difficult too for the existing homeowners who, if you listen to the interviews with them, they had no idea that this was going to be happening. And so now they have this house where pretty much all of their wealth is stored and they can't get insurance. And you cannot, I should have said this a lot earlier, but you cannot have a mortgage if you don't have insurance. And about 70% of all homeowners require a mortgage to buy a home. And so it's not like the whole country isn't, not going to be insured, but there are large portions of the country where insurance is becoming a very, very big issue, and it's becoming extremely expensive. It's increased by an average of 20% across the country since the start of 2023. And the solutions that we have in place are, the government can come in and provide a backstop, right? Like FAIR plans, which are fair access to insurance requirements. These are state mandated property insurance companies or plans that will come in and help people out, but they are designed to not be competitive with, the private insurers. And so they're not as comprehensive. They're much more expensive, and they're just not a great alternative to what a private insurer would offer. And if you buy a house with all cash, you can skirt the insurance requirement, but obviously that's exorbitantly expensive. I think the median home is over $400,000. So the average American can't do that. And maybe the other solution will be institutional buyers coming in and purchasing up the homes and doing some sort of self-insurance. But none of those options are great right now. And the main thing is we're just going to have to, and this was the point in the article that I wrote, we're going to have to rethink, number one, the American dream, but then number two, where we let people live.
Is this, I know you focused on home insurance, is this popping up in any other insurance markets from your, understanding car insurance? Is this a potential broader problem, or is it just very specific to homeowners insurance? Because I'd assume you have insurance in these areas and that can affect, other types of insurance contracts.
Yeah, well, I'm sure you guys know, auto insurance was a huge driver of inflation over the past couple of months. Like it was just increasing in cost because cars have gotten bigger, people are driving in very erratic ways. And so auto insurance has gone up quite a bit. And then also health insurance has always been a really big issue in the US. So all types of insurance we are seeing issues because there's just more risk on the table. With home insurance specifically, I think it's more of a problem just because people place, like the bottom 50%, all their wealth is in their house. And so it's really a big issue when your premium is increasing by 20% a year. That's not affordable for the average person. And also, if the average person can't get insurance on a house, what are they going to do wealth building wise, right? Hopefully invest in the stock market, but that's not the case right now. And so we're definitely seeing this in other insurance markets, but I think here it's really an issue just because of the quote unquote American dream.
Mm-hmm.
When you talk to people at the White House and in DC, do you think this is ringing alarm bells for them? Is this something where they're like, okay, this is 100% on the radar and important? Or is this something you think continues to grow as a looming risk that people punt down the road?
I think that just based, and I didn't do due diligence and ask the right questions when I had the interview time, so that is on me. But I haven't heard either candidate talk about this. Vice President Harris has a plan to build 3 million homes, subsidizing down payments, using certain tax credits, but there isn't any talk about home insurance. And so I don't think that this is like, people are obviously thinking about it because there's a lot of information out there and a lot of people have been raising alarm bells for a long time, but you don't really see a lot of talk about home insurance at the policy level, just because it's tricky because you have to talk about climate change. You have to talk about, that the coasts are eroding, and people don't enjoy having that conversation. And so the can does get kind of punted, as you said.
How do you see the market for home insurance evolving as this, looms and people maybe become more aware? Are there, you spent time looking at it, so I'm curious how you think, one path may form here for potential solutions.
Yeah, I mean, there's always solutions, which is good. I think legal reform is probably going to be one step. So Florida is 9% of home insurance claims, but there's 79% of lawsuits filed over claims. And in the insurance industry, it seems that each party is not responsible for their own attorney fees. And so if you made, a litigating party responsible for attorney fees, that could probably reduce some of the costs. And you could also streamline the approval process for rate increases, especially in states like California. Microinsurance products, I think Lemonade offers something like that, where it's, a small insurance alternative so homeowners can patch together insurance. And then collaborative programs, like partnering a government program with a private insurer like State Farm or Allstate could go a long way. Offering those insurers some sort of tax incentive to continue insuring. Climate resilient homes is off, as we talk about building more housing supply, we have to talk about just building resilient infrastructure too, across the board, even outside of housing. And so, yeah, there are definitely solutions, but all of them are expensive.
Yeah,
the litigation statistic is crazy.
Yeah. I mean, it makes sense.
Yeah. And yeah. I haven't fact checked, but I was listening to the Theo Von Trump podcast, and Trump was saying that the lawyer lobbyists are quite aggressive, and right, because unlike in Europe where loser pays the attorney fees, which limits a lot of the lawsuits because no one wants to wind up footing the bill. Right. That is not a really tenable solution in the US just because of how strong that lobbyist group is and pushing back against it.
It's always lobbyists.
Yeah,
you can trace a lot of problems back to the lobbying dollars.
Have you received any feedback since you've put the piece out that maybe you were surprised about or learned more after you had, put this out into the wild for having people to read?
I mean, so like it's on Substack, so there's an open comment section, and then it's across my social media platforms. And so there's definitely an open comment section there. So I think most people are just concerned. We talk a lot about housing supply and how important it is to build housing, how housing is the American dream. Housing is, a lot of people are rent burdened right now. A lot of people are house poor, right, or cash poor, house rich right now too, where they have this big house and it's like, well, how am I going to, deal with this? So I think that a lot of people are just kind of concerned about the state of housing in the United States, and home insurance is kind of another domino that they're like, okay, geez, another one. So I would say that was kind of the primary sentiment that I saw.
Yeah, I saw the one graphic you put in, which showed millennial assets by category and how real estate is just, the main contributor to asset, wealth creation for millennials. Mm-hmm. And that to me just seems, like a ticking time bomb, because housing shouldn't go up as fast as it has in the past, call it 5-6 years.
I know. Yeah. It's like we expect it to both be this, Derek Thompson talks about this speculative asset and a place to live. And kind of like part of the reason that we have such a big housing crisis is the mindset where people are like, well, my house should be, it went up by $55,000 from 2021 to 2022. The median house went up by $55,000. And that can't happen every year. That's more than the median worker makes. And so I think that we're just going to have this massive rethink of housing, like not only as a wealth building tool, like you said, but also just how do we think about it, and the accessibility of it. Because right now, like, do you all own a home? Either of you?
I own a rental property.
Okay.
But Sam can. So I'm probably part of the problem.
Is it insured, Nick?
It is insured.
What about the statistics that you had flagged the other day, just about some of the Florida and Austin real estate markets? I don't know if it was Austin in particular.
Yeah, I mean, I think it ties back to what Kyla is saying here. Those pockets of uninsurable housing is also very desirable areas. A lot of people during, the COVID days moved to sunny and warm places. And those also just happen to be on the coast and, where you're seeing impacts from hurricanes. So it's really interesting to see now potentially a correction. And I actually wanted to ask you, you've coined the term vibesession. How much do you think, the increase in the wealth of an individual being tied to a semi-illiquid asset or their home, if they start seeing property come up for sale that's, marked down 20, 15%, do you think that gets into kind of the consumer vibe and just their willingness to spend? If they had thought, oh, I have this nest egg that's gone up 20, 30% in the past 2 years, and now that's not true. I'm curious if you've thought about that a bit.
Yeah, no, a correction in housing would be disastrous for consumer sentiment. It'd be good for people who are trying to enter the housing market, but for those who, like that millennial graph chart that you were talking about, they made a lot of, like if you got in at 2% in 2020, you are sitting on a pile of gold right now. And if all of a sudden that disappears because housing is volatile, like you're not going to want to spend. That was kind of what we saw in the Great Recession, was people's homes just collapsed in value. And that led to a lot of issues. And so I definitely think it's a point of concern. A lot of people talk about the home insurance potentially being like a next economic crisis, because what happens, like if the insurers do just completely back out and the government has to step in, right? Can the government afford that? So there's like all of these sort of things that are very extreme, like it's in the extreme end of the distribution, but it's something worrying. But yeah, absolutely. Like if home values collapsed, I think a lot of people would not spend money the way they used to.
Mm-hmm. And then maybe as we start to close out here, I know we want to give a shout out to your book. You have a book in this economy that people can go and buy. But to put you on the spot here, are you worried about the U.S. economy?
Just in general?
Yeah.
So I used to be very, very optimistic, and like my videos were very, very optimistic, but this is not my opinion on anything, but you do see a deterioration in the labor market where the unemployment rate is ticking up. You're starting to see just these signs of strain, and now the Federal Reserve is going to start cutting rates. And so they're starting in September. Jerome Powell said that at Jackson Hole last week. So that should abate some of the concern. Just the worry with the labor market is that it's a rolling ball, and the faster the ball rolls, the more speed whatever, like physics, right? It's just
momentum.
Thank you. And I worry that the labor market, and there's studies that show there's momentum with the labor market. That's the whole idea of the SOM rule. And so I think things are going okay right now. The consumer is still resilient, but inflation is going down. The Federal Reserve is going to start cutting rates, which should abate some of the pressure that consumers are feeling on loans. But, you're starting to see the younger generation have quite a bit of credit card debt. 15% of Gen Z has, 90% of they have 90% of their debt on the credit card. Like they are maxed out, 90% maxed out on their cards, which is a really high number. So I'm not sure what's going to happen, but I think that we are just in a different economic cycle than we were for the past few years. We're going into a time of immense uncertainty with the election, and that could change everything, either way it goes. So yeah, really long answer. That wasn't really an answer, but there's definitely points of concern, but I'm optimistic that things will turn out okay.
We tend to be optimistic as far as technology solving problems, but certainly I think one of the things we've discussed is, once the cutting cycle starts, then that can also cause it because people say, oh, let's wait, right? Like things are getting cut. So it's like, we'll wait. And then that can slam on the brakes for the economy.
Yeah. Just a different macro regime. And it's going to take a while to adapt to it.
Yeah. All right.
Great.
Kyla, thank you so much.
Yeah. Thank you for joining us. How should people follow along with all the work that you're doing?
Yeah, so I'm on all the social media platforms at Kyla Scan. And then my Substack is kyla.substack.com. My podcast is Let's Appreciate. And then I have a YouTube channel as well. The book is called In This Economy, and it's available wherever you buy books. There's also an audiobook version that's narrated by me and an ebook. So pretty much everywhere.
How was that recording process? At one point I was reading audiobooks. It's like some charity where you're recording audiobooks for people, and that's
a charity.
Surprisingly hard.
It was intense. Yeah, you're in the studio for 8 or 9 hours a day, and the only thought that you can have is the word on paper because you have a coach who's like, you can't, like, the way that you said that wasn't right, and turns out I say a lot of words wrong, and so it was a really informative experience.
Great. Well, thank you so much again for joining us.
Yeah, thanks for having me. Yeah, thank you.